Hey, everybody, it's Eric J. Olson from Array Digital here with another live taping, if you will, of our podcast, The Journey to $100 Million. So, The Journey to $100 Million, if you're not familiar with it, is a daily podcast where we share all the things that we're doing to grow our company, Array Digital, from our current revenue to $100 million with the goal of obtaining that by 2030. We have a long ways to go and we have a lot to learn. So we learn by making mistakes here and we share those with you on the podcast. But I'd rather not make all the mistakes. I'd rather learn from other people that have made mistakes. And so that's why I've invited Omar on to the show today. So we're going to be having a live discussion and we'll take snippets of this and we'll make it into one or more podcast episodes in the future. So Omar, how's it going?
Hey, I'm very excited to be here. Thank you for inviting me. It's a pleasure.
Absolutely, man. I appreciate your time. So, hey, tell us a little bit about who you are, what you do, where you are, all those things.
Well, look, my background is in finance. So I did both sell side and buy side. Basically, sell side is advisory. Buy side is, well, you're on the other side. You're the actual person or entity acquiring whatever asset, things that people advise you on. So had a pretty good experience there. But my family's entrepreneurial. They've been in real estate and a couple other businesses. I'm the third generation. So I kind of had that little thing going, right? Didn't really think I was going to be an entrepreneur, but at least I had that growing up. Great sets of experiences, professionally speaking, great training, very lucky for that. And then what happened is I moved from Canada about 5-6 years ago, kind of forgetting the time. And at that time, my wife's a physician, that's why I moved. And we got here and we started doing whatever. I got a decent job and I looked at my tax bill at the end of the year. And between my wife and I, we were comfortably paying the 6 figures in taxes. And I was like, okay, this is a nice problem to have, but I understand paying taxes. I don't have to pay every single person's taxes. I don't got to do both of those things. So because of my experiences in the business and real estate, family and professionally, I knew a lot of tax efficiency strategies and all of that, just because, if you have a portfolio over a couple of generations, you just get to know these things, right? Luckily for me at that time, a friend of mine from Toronto, they run a small family office. They owned a lot of real estate. He was like, well, you're in Dallas. I'm going to be in Houston. Our family kind of needs help in restructuring their portfolio. They wanted to pass it on to, the kids, a couple of the girls who got married. They just wanted the cash. This guy just wanted to keep the assets, kind of help them with that. And then I just started doing my own deals, right? Partnered with a couple of people, started doing my own deals. And I joke with people, and everybody says, well, why'd you pick real estate? And I joke with people to say, well, if you can't even sell people on the vision of real estate or acquiring or something, man, you cannot sell anything. I mean, holy shit. Real estate is the easiest thing to sell. So I didn't become a realtor or anything. I mean, mine was more on the commercial side, right? So I structured the deal. I run a private equity company. But my point is, I would not have had the same level of traction, for instance, if I was, say, trying to raise money for an oil and gas company starting out, or say a marketing company, even though they might have been better businesses long term. You never know, right? I mean, they might have been better. So it was the right timing, right place, right timing, but also the product or service that I was selling was something that the average person who I was trying to get money from, so they could be my investors, could also understand. I didn't have to go explain it to them for like 20 minutes.
Sure.
So that's basically what it is, basically.
Cool. So you're the name of your company is Boardwalk Wealth out of Dallas, Texas.
Yeah.
I just want to make sure I totally understand. Are you like 100% focused on real estate investing, or is that one of many things?
It's one of many things, but it's like 85% of the one of many things.
Okay.
Right. Cool. We have a couple of businesses also, but publicly, where we raise money for our deals, we have investors. Publicly, real estate is about 85% of our business.
Okay. But you're not a commercial real estate company.
Well, we own assets. We own commercial real estate assets. I'm just not a broker. I'm not a lender. I'm none of that. I'm just an owner along with my investors, basically.
Totally understand. All right. So you're if I was looking to buy a commercial piece of property like this office building here, I wouldn't.
You would not come to me.
Yeah, but you would be the kind of a person that would be looking to buy those kinds of properties.
Oh yeah. We are the people. Entities like us are people who basically look to buy 30, 40, $80 million projects.
Awesome. All right, cool. Actually, you are just the kind of person that I want to talk to because I am looking to buy a commercial piece of property that generates cash flow right now. So I don't have the not quite as big of a tax problem as you had in the past, but I'm getting ready to pay my taxes for 2020, and
Doesn't feel nice. I can tell you that, even if you got to pay $1.
I mean, hey, look, we set aside the money, and so it's there. But I still don't like writing that big check.
Exactly. You don't have. My point is, you have to do it, but you don't have to like doing it.
Yeah, exactly.
You know?
You have to do it. Exactly. Yeah. So one of the tax strategies that I've been looking into is, instead of writing a check, like I'll just make up numbers, right?
Yeah.
Instead of let's say $20,000, and as a business owner, for anyone who's watching or will watch later, like we don't really get like normal paychecks. I mean, you may get some pay from your company, but it's not going to pay for all of like the profits of your company. So you have to write quarterly estimated taxes, and then at the end of the year you have to reconcile just like everyone else. But you have to actually write a check. And so instead of writing a check for, like, say, if it was $20,000 last year, what I really want to do is write a check for 2021 for like 10,000 and take that extra 10 grand and go invest it somewhere. Probably real estate. It seems like real estate's the best play.
Well, I wouldn't say best, Eric, because best is a matter of perspective and best is a matter of access to opportunity. So, for instance, I'll give you an example. If Mark Zuckerberg and Bill Gates are probably going to invest in some company, well, I guess probability says you shouldn't invest in real estate and kind of go invest with them. Chances are they might be onto something, right? So best, I think, is a matter of perspective. I think a lot of people tend to confuse the industry they're in or the product they're selling with the best thing, right? Now, you can obviously say there is a conflict of interest there. So I always like to shy away from saying it's the best or most optimal, because a lot of times it's dependent on your current conditions. What is your risk appetite? Hey, do you even want to do it? So I'll give you an example. I also do developments, right? Now, with development, what happens is you've got this little period where you raise the money from investors. You also have to invest your own money. And you're going to now start developing. The process might take about a year, 2 years, right? So there's no cash flow coming. And then when you got something, the years you build it up, that year you're leasing the thing up, right? So sometimes it takes a little longer, right? So maybe it takes 6 months to lease the thing up, or 9 months. And then you start generating real cash flow, right? So now a lot of people might say, well, that's too long. I don't want to wait that long. Well, you also got to, and that's not the worst thing in the world, by the way, because everybody has a different risk appetite. But you also have to realize the real fortunes in real estate are actually made in development. Like all these big people you hear about, right? On TV, media, all of that. So best is a matter of perspective. Similarly, for instance, when I acquire existing assets, existing properties that are there, where we might have to come in and do capital expenditures, improve management, all of that jazz. Well, there's already underlying cash flow, right? So we can start paying out for month 3 or 6 or whatever, to whatever it is, depending on the deal. So that might be a better fit for somebody else. So it's kind of mixing and matching, because a lot of times people trying to make sweeping generalizations, and you really want to avoid those types of people, because anybody who just blatantly always tells you mine is the best product under all circumstances and conditions, they're more trying to sell you a product as opposed to work with you to find a solution. And sometimes, by the way, the solution might not be what they're selling, right? I mean, if I can't find, my project doesn't match what you're trying to do, well, then, I mean, I can't change my product, so maybe it's not a match for you right now.
Got it. Yep. So, okay. No, I totally understand. Yeah. If Zuckerberg comes to me and he wants to partner, I may consider it. I may.
Good for you, because I will definitely consider it.
But you're probably going to want more than my $10,000, that I'm trying to.
Well, he also wants the pleasure of hanging out with you and your personality, and your stellar personality.
That's a very good point. And he probably wants to get on the podcast. And so we'll make something happen.
And think about it. You are way more human than Zuckerberg is, because he's a robot.
He does look very much like Data from.
Not only he looks like it, he talks like it also. It's like an android, basically.
Yeah. As time goes on, he's starting to change a little bit. I think he's getting like some AI implants or something like that.
I was like, man, $200 billion, and you couldn't hire a coach to help you speak in normal English.
Hey, but he did a pretty good job in front of Congress. I'll give him that. I was pretty proud of him. Hey, I do have a question though. So, okay, so the situation would be, again, this is hypothetical for anyone who's watching. If I wanted to save, say, like $10,000 in taxes in 2021, and I wanted to invest in real estate, I did actually have a question for you that I haven't found the answer to yet, and you probably know it. If we were to put like a contract on a commercial property or just any property, certainly expenses like an appraisal and any kind of work that goes
Closing
into
costs,
the building.
lender closing costs, all that stuff.
Yeah. What about the actual deposit?
That depends. No, well, look, number one, that depends on what the loan terms are, right? As an example. So, for instance, if a building, just to keep things simple, right? If a building is worth, say, $100, and you get a loan to value or leverage on that building, say, for 80%. Well, that means your down payment is going to be $20 because 100 times 80 is 80% that the bank will finance. You got to bring $20. But what people forget a lot of times is, well, it's not just $20. You got to also bring in closing costs, right? Like whatever loan processing fee, this fee, that fee. They're trying to nickel and dime you all the time, right? For instance, if you are, say, if you're housing this in an entity, as an example, you create a company to house this thing, which typically if you're buying commercial real estate, that's what people do. That's more of a risk management strategy in case somebody, I don't know, cracks their skull, they sue you. It's harder for you to personally get sued, right?
Firewall.
Yeah, it's a legal sort of thing, right? So, well, that stuff also costs you money, right? I mean, whatever, 3, 4, 5, 6, 10 grand. Then every year, when you're filing for taxes on that entity, that's also going to cost you money. So your loan or how much leverage you got on the loan is just one component of the many costs, but basically your down payment is the biggest cost you will be facing.
Okay, but that is an expense that would reduce your tax burden. The actual
no. That's not an expense that will reduce your tax burden. So what will happen as a result is, so again, let's keep things simple, right? You buy an apartment building for $100, 20, and let's assume down payment is the only cost. You have none of this other stuff, right? So you pay $20, you closed on the deal. Now what will happen is, as a result, you have the building goes through depreciation, right? There's some wear and tear on the building. Now, don't ask me why the IRS has decided this way, because whatever, I don't care, right? But if it's a residential building, you can, again, without putting people to sleep, you can depreciate this thing over 27 and a half years. So which basically means if you have 100 divided by what is 100 divided by 27. So every year, the first $3.63 worth of your income on this $100 asset, you can depreciate. That is tax-free, as an example. Now, there's a way around this where you can get more of this tax-free tax write-off. And that's called a cost segregation study, or for the lack of a better word, it's accelerated depreciation. And the theory goes there that, look, your structure, the building you have might be, say, 27 and a half years, but people can say, look, the carpet I put there isn't going to last 27 and a half years. That might last 5 years. The wiring in the walls might only last 15 years. So what an engineer will do, and this is done for a nominal cost, but you still have to have probably an asset over $1 or $2 million for you to justify this cost, right? They'll come in and they'll basically say, okay, the wiring XYZ is the amount of wiring, okay? They have these many plugs. They have these many fans. They have this much paint. They have this much carpet. They have this much hardwood floor. All the other components. Essentially, they will break down a building into the subcomponents. Pretty much all of the stuff. And each of those subcomponents obviously will not be depreciating at 27 and a half years. They'll be depreciating at a quicker pace. So again, without putting people to sleep, that 3.63 that I just mentioned to you right now, that might become $5 or $10 or $15. So the first 10, 15, whatever that formula becomes, because each property is different, you can take that write-off against the income from that property, write it off, and net, you're paying $0 in taxes. But please realize, the cash you generate from the building, cash goes directly into your pocket. This depreciation write-off is just an accounting entry. It's not like real money has left your pocket. Yeah. So that's where a lot of these guys, that's why you hear all these developers, all these people who the common man would say, for instance, they're cheating the tax code. Well, they're not, because first of all, they didn't write the tax code, number one. And number two, the issue is, it says there that you can take the write-off. So what kind of idiot would want to go and pay more taxes? I mean, you'd have to be a lunatic to pay more taxes.
Yeah, the goal is to always pay your fair share per the law. And if the law says you take depreciation, you take depreciation. Yeah, of course.
Yeah, so my point is, that's how. So when you hear about people, for instance, and real estate is just one example, oil and gas is another. Every industry has its own quirks, right? So you got to figure out where you fit. And that's why I'm saying a lot of times, for instance, very rich individuals or even semi-rich individuals will oftentimes buy real estate that, say, an investor like me would not buy. Because for me, I'm looking at yield. I got to hit a certain bunch of metrics also. But they'll buy it because basically they can offset that tax write-off.
Got it.
Right? So for them, yield isn't important because they're like, look, If I got to pay the man $5 million in taxes, I might as well take that $5 million, buy a $15 million property, and take a gamble that the property value will go up. Because my point is, when you buy the asset and it's already generating some cash flow, even though it's the half of whatever I would want for, well, that's still better than paying the man you $5 million in taxes, right? Because once you pay the man, it's gone. It's not coming back. So 3% is still better than the 8% I want. At least you get something, right?
Love it.
For free.
Yeah.
So,
No, I think it's great. Yeah. All right. So you mentioned that third generation investor. So you're in a family business, and then
not anymore. I mean, they help, but not really.
Yeah. And then about what, 5 years ago?
Yeah, 5 years ago, I started doing my own thing. But the other big impetus for me also was, I think I was at the right place at the right time. I was in Texas. Texas is very entrepreneurial. I tell this to all my friends. I was like, man, I was born in the wrong place, man. Holy moly. I wish I was born in Texas. Texas is so entrepreneurial. And people are, it's just very infectious, right? You get to it and people just want to do deals. People want to just, I've met people, honestly, I'm not even joking with you. I've met people who are experienced investors, right? For coffee, couple of coffees, bam, next deal I got, they give me 200 grand. Again, they're not stupid people. Obviously, they have done their research to see, hey, is this the right person for my dollars? But it's game time, right? They just want to do deals. Let's go. If you pick the right person, go for it. They don't take years to make a decision.
Nice. Yeah. They're ready to rock and roll. That's cool.
They're not stupid. They're very intelligent, but they don't wait forever. Because a lot of times people keep waiting and waiting for the perfect moment, and they let be perfect be the enemy of good.
Yep. You hear that a lot, and you see it a lot too. So, you know, a lot of our listeners to the podcast, they're either new to business, you know, running their own business, or they're thinking about getting into business, and you know, they're kind of worried about making mistakes.
Yeah.
And you know, I think mistakes are, you know, pros and cons. Yeah. Because certainly you don't want to make mistakes, but when you do, there's an opportunity to learn. And so one of the things that I always like to find out about is, you know, what are some things that you've learned along the way? And I'm sure there's a ton of them. And maybe you know, it's too broad of a question, but either in the beginning, you know, maybe some things you would have done different, or even recently, like, you know, like I could probably cite, like, you know, 5 things that I did wrong today, but just some.
I can cite a lot more than that.
Yeah, you're probably right about that. But yeah, just anything come to your mind as far as like some tips and tricks, maybe I think that some wisdom that you can offer to the listeners.
So I can only look. The big overarching thing that I think a lot of people can say is that marketing is so important that a lot of people look down. Especially, I've seen this personally. And I personally witnessed this. A lot of trained professionals, like I'm in finance, right? I worked in investment banks, all that. A lot of trained professionals, like say investment bankers, doctors, lawyers, you know, these so-called conservative white-collar people who've taken, God knows, 20 years of schooling just to basically start doing their first job. A lot of times they instinctively, in some shape or form, and by themselves, I included myself in that list till 5 years ago, they either look at marketing as something that needs to be done, but not really. I mean, it's not really the focus of my business or whatever, or they look down on it. Well, why do I got to market? I am the best worker in the world. Why would I need to market? Or if I do, it's kind of a half-ass sort of way of doing it. So please get the hell off your high horse, okay? Because and this, I don't know about other people, but I can tell you this because I know a lot of doctors, lawyers, accountants, finance people, private equity people. And these are all people with a lot of schooling, conventional schooling, right? Conventional schooling. Marketing is an afterthought. And that is the biggest mistake you can make because nobody gives a shit how good you are. Nobody cares if you went to Harvard. In my case, nobody gave a shit that I worked in 2 of the biggest bulge bracket banks. I had a CFA charter. I mean, that's a gold standard. Nobody gives a shit. Yeah. You're not good at marketing. And you can't just say you want to do it. You have to internally internalize the fact that this is like, if you don't sell and if you don't market, none of this other stuff matters. Nobody cares how good your accounting system is. So but the other thing for me, and I've seen this a lot, again, coming from finance background, I've seen this a lot with people who are typically coming from the top schools like I did, or they work in these investment banks, that they find the transition to entrepreneurship. Everybody says we want to be an entrepreneur, right? But they find, and I said included in this, they find the transition harder because a lot of times we like to pretend to, or at least like to think of ourselves as smarter than the average person. And we get in our own way. And in the external world, which is not, say, an investment bank, everybody doesn't wear a $3,000 suit and show up to work. That oftentimes it closes a lot more doors than it opens for you.
Yeah.
So you kind of have to be very open to understanding that, look, in the real world, outside of an office, the 50-story office tower that all these investment bankers work in, the real world is kind of different. You have to get out of your own way. You have to be a little less cocksure. And not everybody in the real world is a psycho trying to act like an alpha male all the time. Because in a lot of law and finance, it's a very male-dominated field, right? So everybody wants to beat their chest and tell you how great they are. And the real world doesn't necessarily work like that. So you have to be open and humble and be flexible, basically. That's very important.
Yeah, all great points. On the first point, marketing, we're a marketing agency. I completely agree for lots of reasons, but the reason that we got into marketing, we started off doing basically just websites or mobile apps, but we would build something. We would spend 6 months and a lot of our clients' money building something. We'd hand it over to them and then they wouldn't market it. And it got frustrating for us. We're like, we're wasting our time here. I mean, it's nice to get paid, but I want to work on something that's going to turn into the next Uber or Twitter or something like that. And so we started to tell our clients, like, whatever you pay us, you need to set aside that same amount of money for marketing. Go hire a marketing agency and they'll help you. And then we started to kind of tiptoe into marketing. And then we realized, you know what? Actually, marketing is more important than the thing that we were building.
Oh, everything. Marketing. If you don't market, nothing else matters. I don't care how good your product is.
There's a personality, Grant Cardone, does a lot of sales training. And he has a saying that best known beats best. Best known beats best. And it's true, you know, and there's a lot of examples throughout history with the Betamax and like VHS as an example. The best didn't actually win. Best known did. The best adopted. So yeah, great point on the marketing. Totally agree. So,
and I think this is a bigger issue with a lot of white collar professionals who, again, like I'm saying, conventional education, right? Because conventional education just tells you, open your book, I don't know, read it 5 million times, pass your test, get good grades. And in the real world, good grades aren't necessarily always have a direct correlation with the amount of success your business or you might have as a person, by the way, dealing person to person with people.
Yeah. If you were to start, or if you were to give advice to someone that wanted to start a brand new business right now, but didn't really know what to start it in, what would you kind of suggest to them? What should they do, you think?
Well, I always suggest having a rich uncle or rich parents. That always helps, because you don't have to be good at anything. You just have to be rich. So if you can't do that, then what I would suggest is, again, a lot of finance and law people do it. And again, I'm using these examples because I'm from that world, right? So I don't know enough about other worlds. Informational interviews, I think, are fantastic. That's basically mostly how a lot of investment banking jobs get done, that you basically start networking within whatever area, rough area. You don't have to be like super precise, right? Whatever rough area you want to be in, and you take people out for coffee dates, I shouldn't call it because it's professional, but whatever, coffee meetings. And you kind of ask them and just make it about them. Don't try to pitch them on a job you want or yourself or whatever. Just make it about them and then maintain that relationship and network. So, because a lot of times what happens is different people have various paths on how they got to it. And if you develop good relationships, you have a good network, many doors can open. But the reason why a lot of people don't do this is because this is obviously a long-term thing. And by the time a lot of people start doing this, their back is against the wall. They want to get money. They're out of a job or something. And this is not a thing you do when you need money tomorrow to pay your bills. So this is something, the earlier you start, the better it is. And your network really is your net worth of sorts, right? So even if you don't know what you want, at least start talking to people, interesting people, and just going from there, because interesting people happen to know other interesting people. And interesting people, by and large, aren't very pigeonholed into just being one thing or one person. They might have one job, but they know other people. So that, I think, is something that really helps set people apart.
Yeah, I totally agree. You need to cultivate your network before you need to use or activate your network. And I see people make this mistake a lot. I especially saw it when I was an employee, and I would see one of my coworkers who like ignored LinkedIn as an example forever. And then all of a sudden you saw that they were getting a ton of connections and you're like, that guy's, on the move.
Yeah.
But it was too late. Like by the time that they needed those connections, it was too late to start building them. So yeah, you have to build it in advance.
And look, my point is, think of this another way. If some guy or girl only hit you up when they needed something.
Yeah.
That's just, you everybody knows that's kind of gross. Don't do that. It's just it's just not cool, right? Like every time you need something, you give me a call, but other than that, I don't even exist. Right. So that sort of stuff, right? And a lot of times I think people are forgetting the art of small talk. A lot of times you reach out to people not because you have something profound to say. You reach out to people just to say hello. Hey man, what's up? We haven't talked for like, I don't know, 8 months. And I thought of you, and that's it. You don't need to have like some spectacular reason to talk to somebody.
Yeah.
And most people appreciate it, I think, actually, because it's a natural human thing, right?
That's great. That was awesome, Omar. I appreciate it. I really appreciate the cost segregation, because I was familiar with the because like I said, I'm looking into commercial real estate investing, and I knew about cost segregation, but I didn't realize you can go down to like the wiring and the
well, that's how they accelerate the depreciation, right? Because each subcomponent has a different life, essentially.
Yeah, I thought it was more like furniture, that you were.
Oh no, dude, this is America. They will nickel and dime you till like the last cent. Don't worry about it. They will find a way.
Cool, Omar. All right. Well, hey, if there's someone out there that has a pile of money and they're looking to invest it in commercial real estate with someone like you, what is the best way to get in touch with you?
Well, you can reach out to me via email, Omar, OMAR, at Boardwalk Wealth, BOARDWALKWEALTH.com. So Omar at boardwalkwealth.com. What you all should also do is go to our website, boardwalkwealth.com. Hold on, let me tell you what it is exactly. So if you go to our homepage, and now magically this homepage isn't going to load. Yeah, if you go to our homepage, right on the front, on the right side, you'll see a little box that says name, email, and how'd you hear about us. So click that, click the button called Get Access. You'll get an email, verify your, email address, you'll be added to the distribution list. Nice. And that's how we can get in touch.
Cool. Actually, I have it right here. Let me bring that in.
Well, that's the contact form. So you could do that as well. So if you actually go to the website, you can go to the contact page. That just directly emails me. Or you can fill this little section out. When you click Get Access, it'll send you an email. You verify your email, you're added to the distribution list.
Fantastic. All right. I will do that right after this. All right, Omar. Hey, man, I appreciate it. Thanks, bud.
No, thank you very much for having me. I'm very glad. Thank you.